Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, June the 15th, 2010. Well, a very bullish day today, and we have a very large green-bodied candle, a continuation of the trend to the upside, with this candle making a higher high and a higher low, in the same manner that we've had a series of candles making higher highs and higher lows. The previous day we had the bears in control, and we were on the alert for a potential change of trend, but the low of the previous candle was not taken out, so the trend continued to the upside, and that's the important thing to consider when markets are actually trending in either direction. The trend will remain in force until we have evidence otherwise, and evidence will be the opposite configuration of highs and lows. So in this case, there was no confirmation of any change of trend, even though the short-term dynamics or our reading of what's happening with the bulls and the bears, even though that was fairly negative. So today we have a very large green-bodied candle, and that tells us that the buyers have made some very solid net bullish progress. The buyers have closed in control, and they've shown strong commitment to taking this market higher. Now, this also completes the double bottom pattern, and here we have the prior trend trending down. The two troughs in the pattern, here we have like a W pattern, the two troughs, the intervening peak, and we have a solid bullish close up above that intervening peak. We can actually draw a target for this pattern, and the target is the distance between the troughs and the intervening peak, projected up from where the market broke out of to the upside. So the target that we have for this pattern is actually 1169, and that just funnily coincides roughly with an area of previous resistance. Now, on the way up, if the market does continue trending up, then there is potential resistance offered at around the 1133 region, where we've had previous support and resistance, then certainly at around 1150, and then 1163. Before that, though, we do have an interaction with the cloud. The cloud here is around the 1140 region, and that will offer very, very strong resistance. Having said that, though, the cloud is very thin, so the amount of resistance that the market will add is not as great as if the cloud was thick. So even though clouds do offer strong resistance, it may be fairly easy for the market to break out to the upside, especially if the market can continue the momentum that it's been building over the last week or so. Now, the market is still trading down below the cloud, so it is still in negative in terms of the big picture. So we have a negative bias. If the market breaks out up above the cloud, then we will have a positive bias. The market is, however, trading up above the Tenkan-sen and the Kijun-sen, so the market has a bullish bias in the medium-term and fast-term timeframes. Now, looking at the Kijun-sen here, that was previously flat, and the market price action was attracted back towards there, and that happens quite often when the Kijun-sen turns flat. Now that the market's broken up, back up to the outside of that area, and it's failed to offer resistance, then we may start to see that tick up and start to point up. The Kijun-sen has started to point up, reflecting the upside momentum in the market at the moment. So in the big picture, we have a bearish market, bullish in the lower time frames, with a potential target from the breakout of the double bottom pattern up around 1169.